Welcome to the debate. Today, we're diving deep into the investment outlook for Coupang, traded on the NYSE as CPNG. This is particularly interesting now, especially after its, significant and hard-won shift to profitability. And the central question we're going to explore is this. Does Coupang's recent undeniable profitability really solidify its position as, a robust long-term value investment? One with substantial upward potential, maybe offering a true alpha opportunity? Or do the identified market complexities and, frankly, inherent risks warrant a more cautious, maybe tactical investment approach, recognizing, of course, the potential for periods of omega volatility?
Right, a crucial distinction.
Exactly. And this debate emerges directly from an in-depth analysis of Coupang's financial and market performance. A report that, frankly, high-level traders, including those following the insights of Jinlogu, would probably find invaluable. So, I'll be presenting the argument for Coupang's strong long-term value and growth potential, positioning it as maybe a foundational piece for patient investors.
Okay, and I, on the other hand, will offer a contrasting, maybe more cautious perspective. I'll be highlighting the significant risks and complexities that are identified in the material, suggesting perhaps a more dynamic engagement with the stock is needed.
All right, so let's start there. Coupang has, without a doubt, achieved a pivotal turning point. I mean, this marks what many see as its true alpha moment. In 2023, the company proudly reported its first annual operating profit, $213 million. Now, this isn't just some minor financial adjustment. It really represents a fundamental strategic shift. Coupang is no longer merely a, pure growth stock, perpetually investing in consuming capital. It's actually transformed into a demonstrably profitable entity. And this profitability, for me, it's the direct culmination of years of strategic, frankly, massive investments in its unique infrastructure. Investments that are now decisively yielding strong results. We've seen consistent positive operating cash flow since 2023, and crucially, the debt ratio. That's shown a remarkable positive trend. It's improved from a relatively high 160% down to 145%. Now, that 15% reduction isn't just a number. It fundamentally strengthens Coupang's balance sheet. It signals, reduced financial leverage and a healthier, more mature company, less reliant on external funding. My core philosophy here, chikenengoshi kyoguk namninda, which roughly translates to what is protected ultimately remains, I think it perfectly encapsulates this journey. These sustained, disciplined investments, they're now translating into tangible, long-term gains that, truly endure.
Okay.
Furthermore, our technical analysis, and this is a methodology favored by sophisticated traders like Jinlogu, including detailed VPAR patterns, which basically track the average price paid by investors at different volume levels, giving us a clearer, sort of unbiased picture of where strong buying and selling pressure actually lie. Well, this analysis indicates robust upward momentum. The medium-term trend is firmly in an acceleration and maintenance phase. That means the stock isn't just rising, but its upward trajectory is consolidating and gaining speed. We're observing sugup hwaksan, that's supply-demand expansion across all time frames, short, swing, and medium, which points to a broad influx of capital and growing interest from, various investor types. This suggests the company is preparing for a new, powerful upward wave, maybe a significant re-rating event. The material even points to a swing target of $35. That's consistent with a 1.618 Fibonacci extension or an Elliott Wave 3 progression. Now, for those who follow these patterns, Elliott Wave theory suggests market prices move in predictable patterns driven by investor psychology. A Wave 3 is typically the strongest, most extended leg of an uptrend, and Fibonacci extensions help us project its potential peak based on prior movements. So this signals really significant upside potential for investors who recognize this alpha moment.
Okay. Well, I certainly acknowledge Coupang's transition to profitability. It's a significant and, yes, positive milestone. But I do come at it from a fundamentally different perspective, one that urges a more cautious and tactical approach. My focus is really on the substantial, undeniable risks and uncertainties that temper an unreservedly bullish buy and hold forever outlook, especially for those who need to navigate potential market omega moments.
Fair enough.
The most pressing concern, which our analysis clearly highlights, is the ongoing Fair Trade Commission, the FTC investigation into alleged algorithm manipulation. Look, this isn't just minor regulatory noise. It carries the very real potential for significant fines and maybe even more damaging, serious reputational damage. This investigation serves as a critical near-term event trigger that could, quite quickly, overshadow and potentially absorb a substantial portion of that $213 million operating profit you just celebrated.
The competitive landscape in the Korean market is, well, it's rapidly intensifying. We're witnessing aggressive entries from formidable Chinese e-commerce giants like AliExpress and Temu. This isn't just about market share. These players are known for their willingness to operate at extremely thin margins, or even at a loss, just to gain a foothold. This could easily lead to severe price wars and a significant erosion of Coupang's hard-won profit margins. The material explicitly highlights 경쟁자 competitor risk, as a consistent warning signal identified by AI algorithms, which underscores its gravity.
Right.
And, while the technical analysis you mentioned certainly points to upward potential, the material itself, in its thoroughness, it emphasizes the critical importance of risk management during potential market downturns. It identifies clear potential pullbacks, down to $29 for an Elliott Wave 4 correction, which is typically a corrective, often sideways or downward move following that powerful Wave 3 upswing, or maybe even down to $21 during extreme market shocks. This clearly suggests that even for a long-term prospect, the upward path is not a smooth ride. It's fraught with significant volatility and requires careful navigation, especially for those not fully prepared for sudden omega shifts.
I hear your points on the risks, and look, they are certainly valid considerations for any prudent investor. However, what I find truly compelling is that Coupang's sustained operating profit and positive cash flow. They don't just represent a fleeting moment. They demonstrate a robust business model now fully capable of self-funding its own growth. And this dramatically reduces its reliance on external capital, fundamentally altering its risk profile. This isn't just about numbers. This fundamental strength positions Coupang for long-term appreciation. It clearly signifies a re-rating from a pure growth stock, which, lives and dies by market sentiment, to a genuine value stock. And we see this shift borne out by consistent institutional and AI-driven buying based on profit growth and cash flow improvement indicators. This isn't just about surviving. It's about thriving through strategic, disciplined infrastructure investment that is finally paying off, creating a self-sustaining engine.
Advocate, I appreciate your confidence in Coupang's new profitability, but I remain quite skeptical that this $213 million operating profit is robust enough to truly absorb the potential impact of a significant FTC fine. I mean, a fine in the hundreds of millions isn't out of the question, right? And that could quickly absorb a substantial portion of that profit. And how sustainable is this profitability if faced with aggressive price competition from AliExpress and Temu? These aren't just new entrants, they are global behemoths. Our analysis of 경쟁자 competitor risk isn't just a theoretical concern. It reflects how these players have disrupted other markets. They could force Coupang into price reductions that directly impact their margins, even for a robust model. Do you truly believe that current profitability can withstand that kind of market pressure without significant erosion, particularly given the historical patterns of such competitive entries?
Dissenter, you've raised important points, but I believe the market itself, through its collective wisdom and its patterns, provides a clearer signal. Our VPAR analysis, which is a sophisticated tool utilized by top-tier traders, including Chinlogu, precisely identifies mekjom, or critical turning points, and pambokdoin and lidum, or recurring price cycles, in the charts. Now, this isn't just about identifying trends. It's about understanding the underlying market psychology driving strategic entry and exit points for, smart money. The current state of sugupwaksan, which means broad supply-demand expansion across all timeframes, coupled with that Elliott Wave 3 extension, points to a strong, predictable upward trajectory. Look, these are not mere speculations. These are observed patterns that have proven effective in the past, reflecting a genuine accumulation of value.
For investors seeking their alpha opportunity, these patterns offer a roadmap.
Your points on predictable patterns are compelling, Advocate, and I definitely recognize their historical effectiveness. However, I'd frame their predictive powers somewhat differently, especially in the face of sudden external catalysts. While patterns can certainly be indicative, the material explicitly advises against being shaken by every market news. But let's be clear, the FTC ruling is not just market noise. It's a specific, identified event that could severely disrupt any technical rhythm, regardless of how strong it looks. Such a definitive event, or even broader market dynamics influencing basket trading algorithms, these complex automated strategies that trade multiple related stocks simultaneously, meaning a sell-off in a competitor like Amazon or Alibaba could trigger ripple effects for Coupang. Well, that could easily override even the most compelling chart patterns.
Moreover, this strong upward momentum you speak of also pushes the short-term RSI, the Relative Strength Index, which measures the speed and change of price movements, indicating if a stock is overbought or oversold. Well, it pushes it into an overbought zone. This signals that the stock might be temporarily overextended and due for a pullback, irrespective of the longer-term pattern. How can VPAR or Elliott waves fully account for these sudden non-technical omega shocks?
My core philosophy, and it's one that resonates deeply with the long-term perspective of Jin Luogu and similar high-level investors, is Chikui Nengushi Gyolgug Namnanda. Coupang's long-term infrastructure investment has finally resulted in robust profitability, making it a compelling long-term hold, particularly if one can accumulate at strong support levels like $25 or maybe even $21 during deep market corrections. This is about investing in enduring value that has successfully navigated its initial, often unprofitable growth phase. The company has, done the hard work, built the foundation, and is now reaping the rewards. For those who can look beyond the daily fluctuations and hold through inevitable market omega moments, the ultimate prize is significant, representing a true alpha return. This isn't about ignoring risk, but understanding where the foundational value truly lies.
I see why you think that, Advocate. And the appeal of long-term value is undeniable, especially when a company has achieved profitability like this. However, even the report itself, the one we're debating, details specific short-term and swing trading strategies. It includes a first buy entry around $29, which, interestingly, aligns with an Elliott Wave 4 correction, and even split purchases at $25 or $21 for market-wide declines. This suggests that even for a company with long-term potential like Coupang, a highly tactical and risk-managed approach is explicitly advised and necessary. The report doesn't just recommend buying and holding without consideration for these tactical points. Furthermore, 공정거래법 관련 뉴스, or Fair Trade Act-related news, and 중국 경쟁사 issue, or Chinese competitor issues, are explicitly identified as triggers for active risk management, not just passive holding. Advocate, if the very material we're discussing highlights such granular tactical approaches and explicit risk triggers, doesn't that imply that even for a long-term investor, a set-it-and-forget-it strategy might be insufficient, especially when navigating these known potential omega events? For investors who value clear guidance tailored to their situation, acknowledging these tactical needs is, paramount.
Coupang's financial transformation, moving from a growth-focused entity to one demonstrating strong profitability and positive cash flow, fundamentally redefines its investment profile. It signals, I believe, a clear alpha opportunity. This, combined with the successful payoff of its long-term infrastructure investments and those strong technical indicators, underpins its potential for significant long-term value appreciation despite the acknowledged risks. It is, in my view, a stock that warrants diligent observation for strategic accumulation as its value matures, a true testament to the principle that what is protected ultimately remains.
Right. And while that recent turn to profitability is certainly a positive development and a critical step, the material, as we've discussed, clearly outlines substantial risks. Regulatory challenges and intensifying competition are chief among them, and they introduce considerable uncertainty and potential omega periods. Therefore, while long-term potential definitely exists, a highly cautious, risk-managed, and tactical approach to investment seems essential. Investors really should be prepared to adapt to market shifts driven by these external events, rather than solely relying on fundamental shifts or idealized technical patterns. Understanding these dynamics is just crucial for any investor, regardless of their time horizon.
Absolutely. Both perspectives, I think, highlight the inherent complexities in evaluating a company undergoing such a significant transition. Material provides a really rich framework for understanding both the promising alpha opportunities and the critical omega challenges facing Coupang. It truly invites all our listeners to delve deeper into these nuanced considerations.
Definitely worth a closer look.
So if you found this discussion illuminating, remember, this is just a glimpse into the in-depth analysis available. Don't be left a step behind in the market. Now is the time to subscribe and join the ongoing conversation on the debate, ensuring you have the insights to navigate your investment journey.